Welcome to Dimensional Knowledge Quest, your gateway to exploring the most pressing issues shaping global finance, geopolitics, and economics. Today, we're uncovering a seismic shift in the world of monetary power, the massive accumulation of gold by central banks, particularly within the Brics nations. With inflation running rampant and economic uncertainty looming over major economies, gold is emerging as more than just a store of value, it's becoming a weapon in the arsenal of nations preparing for a new financial order. Why the sudden gold frenzy? Gold has historically been viewed as a safe haven, protecting wealth during times of crisis. However, in recent years, the reasons behind gold's resurgence go beyond traditional investment hedging. Central banks, especially those in the Brics bloc, Brazil, Russia, India, China, and South Africa, are buying gold at record rates. This isn't just about economic protection, it's about building a financial defense mechanism against Western-dominated systems, particularly the US dollar. As global inflation rates soar and geopolitical tensions rise, the strategic importance of gold is becoming more pronounced. While individual investors have long turned to gold during times of crisis, entire nations are now using it to secure their economic futures and reduce dependency on volatile foreign currencies. Brics, in particular, is leading the charge in this new age of gold accumulation. Later this month, the first-ever Brics Plus Summit will take place in Kazan, Russia, from October 22nd to 24th, marking a significant moment in global financial history. Russian President Vladimir Putin will officially welcome Egypt, Ethiopia, Iran, Saudi Arabia, and the UAE into the Brics Plus alliance. With this expansion, Brics Plus will represent over 40% of the world's population, solidifying its role as a formidable counterweight to the Western-dominated financial order. The expansion of Brics Plus goes beyond politics and economics. It's a strategic move to reshape global trade and finance, with gold as a central tool. By diversifying reserves with gold, Brics Plus countries are hedging against the uncertainties of fiat currencies, particularly the US dollar. This shift hints at a new financial system where Western dominance fades, and alternative, gold-backed economic structures emerge. The Brics nations have strategically amassed significant gold reserves, underscoring a collective move to reduce reliance on the US dollar and fortify economic sovereignty. China, holding 2,165 metric tons, ranks as the world's sixth-largest gold holder, aligning its accumulation with a broader diversification strategy amidst trade tensions and geopolitical challenges. Russia, with approximately 2,330 metric tons, leverages gold as a crucial financial shield against Western sanctions, ensuring stability outside the dollar's influence. India, holding 797.4 metric tons, reflects a blend of cultural reverence and economic foresight, positioning itself as a resilient player in the global gold market. Collectively, Brics nations are harnessing gold to secure their financial futures in a turbulent global economy. While Brics nations have been building up their gold reserves, the West has only recently begun to wake up to the value of gold in this evolving financial landscape. Throughout September, Western investors saw growing ETF inflows into gold, driven by rising inflation in both the US and Europe. However, some experts warn that this response might be too little, too late. Financial heavyweights like Ray Dalio have been vocal about gold's importance, advising investors to allocate at least 15% of their portfolios to gold. Dalio's famous quote, "If you don't own gold, you know neither history nor economics," has never been more relevant. While the West has been slow to react, Eastern economies, particularly in China and India, have been rapidly acquiring physical gold, marking an unprecedented shift of wealth. According to Bai Xiaojun, a market reporter in China, prices for physical silver and gold in the Shanghai Gold Exchange are averaging 10% higher than those in Western markets. This price discrepancy is fueling a rush to transfer gold from Western vaults to Eastern reserves. Meanwhile, Western banks are finding themselves in a precarious position, as their massive short-selling positions in gold are backfiring. Allegations of price manipulation to maintain the illusion of dollar dominance have surfaced, but with rising gold prices, these short positions are bleeding banks dry. As banks scramble to cover their losses, nations like China and India are quietly buying up gold at favorable prices, further strengthening their financial positions. Are we witnessing the birth of a new global financial order? With Brics nations rapidly amassing gold and China potentially developing a gold-backed yuan, the answer may be yes. Gold is shifting from a mere store of value to a cornerstone of a financial system that challenges US dollar dominance. As the Brics Plus Summit approaches, one thing is clear: gold is central to this financial shift, and the West can no longer afford to ignore this golden resurgence. Stay tuned to Dimensional Knowledge Quest for more insights as we monitor these groundbreaking trends. The golden future is upon us, and understanding its implications could be key to navigating the challenges ahead. Don't forget to like, share, and subscribe for more in-depth analysis on global finance and beyond.